Hi, guys. Hello, everybody, and welcome to this live webinar. I'm so glad to have all you here with us. My name's Amir. I'm one of the traders here at Tradology. I'll also be your co-host today for this webinar. Now, we've got some really exciting material coming up for you. In case you'd like to communicate with us or ask any questions, feel free to do so. You're more than welcome. We'll try to answer all of your questions. You can use the chat box down below here on Zoom meeting, or if you are watching us on Facebook or our stream on YouTube, you can also use the chat there on YouTube and Facebook. So really excited to see everybody here. I'd like to welcome now our host, Mr. Adrian Jones. Now, Adrian is a full-time trader here at Tradology, also a content creator, and he has helped thousands of students and forex trader to become successful, to get rid of the bad habits they had, and taught them numerous trading techniques. He's also prepared something for you today that will be applicable to any trading system. So without any further ado, hello, Adrian. How are you today? Can you hear us?
I can. Thank you, Amir. And I see
Hi.
everyone else on here is saying hello and that they can hear us as well. So good to see everybody here. Thank you for the introduction, Amir. And I've got some exciting stuff to share with you today. It's based on essentially feedback I've been getting from my own students, well, not only my own students, but also many traders out there that have been following me and have wanted to know a little bit more about the topic that we're going to cover today. And although it's fairly brief, I'm still going to try and give you as much information as possible. And I'd like you to stay right to the very end, please, as I want you to get as much value out of this presentation as possible. So without further ado, I'll then get started. And to do that, I just need to share my screen and off we go with that. Now, I have to start this slide up from the beginning. Let's do it there. So today's is called the Winning Powerful Techniques, or Winning Powerful Techniques when using a stop loss that work. And as I said, this is something that's come up over and over again. People aren't sure what a stop loss is, especially those new to trading. I hope that I'll give you some insight into that today. I'm sure I will. Now, what is a stop loss firstly? Well, a forex stop loss is a function offered by brokers, a very technical term here, but a function offered by brokers to limit losses in volatile markets moving in a contrary direction to the initial sale or trade. The function is implemented by setting a stop loss level a specific amount of pips away from the entry price. So don't worry, I'll get to show you that just now. And I think by starting, I just want to show you on the actual MetaTrader 4 platform, which majority of traders use, where it is that you set your stops. And then I'll get back to the rest of my presentation. So here we have an MT4 chart. I'm just on a demo account at the moment, just looking at the chart. And what you could see is basically it's just a price chart, nothing else. And what I've got at the bottom here is an example of some trades that I took recently. And these will tell you, for example, over here in your account history, where you have set your stops, where you have set your take profit targets, and the levels there, so that you can see whether or not you might have been stopped out in profit or otherwise when it's red, and when your take profit targets were hit in green. So inside your trade account history, you'll be able to see this. But where do we set our stops? Well, one way of doing it is by opening up a new order, and I'm going to be explaining more about techniques we can use in just a moment, but just the technical side of how do we set up a stop. We would then have this order page pop up on our MT4 platform, and you'll see that we can either buy or sell. And at the top here, we've got the option of including our stop loss and our take profit. Now, take profit is our target level. If we've got one, we put it in there. Now, we do want to minimize our risk, and we want to encourage all traders to use a stop loss. So we will be setting a stop. Now, the various methods of using a stop loss I'll explain later. But once we decide on the initial stop loss, where will that be? We can place that in this section over here. So if I was going to take a trade now, for example, and I wanted to set my stop over there, I'd measure out what the price level is there, and we can see there that it's 1.1767, and then I would just simply put that in here, and that would be where my stop would be if I'm going to go long. 6.7, let's just do that for now, for example. And as I said, 1.17, well, we can make it 1.1769. Let's rather do that. 69, just for an example. And then we would want to buy into the market, right? So let's just do a random trade. There's no system to this. I'm just trying to show you how to enter a trade. And once we've set the trade, we're in the trade. Unless we want to set a take profit target, which some systems recommend you do, and most of mine do. This is just to give you an example. So I'm in the trade there. There's where the price is at the moment, and there's where my stop loss is. Now, this does give you an option. If you right-click on that line, which indicates your stop loss, it would be above price if you were selling the trade, where you can modify your stop loss. So I can go back and I can change my stop loss at any given time there as well, right? And also, if I had to right-click on that, I could cancel it. I could simply close the trade. Now, there's another interesting feature, and you're going to hear me talk about this later. So I just want to show you how to get it. If you right-click on that line there, you could set your trailing stop, and this will tell you how many points away from the stop, from price you could trail your stop. So let's say, for example, we were going to do it at 15. Then I would just simply select 15, and then it would do that for me. All right, so it's going to trail my stop. So I'm going to explain more about that in just a moment. Now, one other function that we could look at is also when entering a trade, we can enter a trade by market execution or by pending order. Now, with a pending order, we can decide when we're going to have price hit our certain target that we wanted to hit first before we enter. So the price might be up here somewhere. We're waiting for the candle to hit a point up here, and then I could set a certain level with that so that only when price hits that level, or if we're in a trade to the downside, when price hits that level, then we would enter into a trade. And there's a few types of pending orders. There's a buy limit, a sell limit, a buy stop, and a sell stop. Now, these are not stop loss targets that we're going to set up here, but these sometimes get confused with stops because of the word stop, sell stop, buy stop, and so on. So I'm going to explain these entry methods to you a bit later in the presentation also, right? But these are more where to enter the trade. A stop loss is where you would exit the trade if the trade went against you for whatever reason. And that's what we need to just have a look at on the MT4 platform so that we know. Now, market execution is just entering the market exactly where the price is at that time, either buy or sell, as I just did a moment ago, right? So if we wanted to close our trades, we would simply be able to go to where price is at the moment. And you could also have a look at this by right-clicking on the mirror. You can see here that we have various options. You also have something called one-click trading, just so that you know, where if I had to press either sell or buy here, it would enter the trade for me. So for example, if I wanted to buy, I could then enter in a buy trade again. But obviously, I'm not going to do that just now. You'll see my stop loss has been trailed up in this particular instance. And should it come back down, it's going to close me out there in a profit. So that's one way of using the trailing stop that we saw earlier. But anyway, that's just to give you some basic idea of the functionality on the MetaTrader 4 platform. So as I'm explaining to you the various options, that you would then have some kind of an idea just by looking at the chart on how to enter and exit the trade. So we'll get back to our presentation then for that. So we started last year with the MetaTrader 4 platform, and now I want you to answer this question if you can. Have you ever wondered how professional traders ride big trends? We often hear about how these guys are riding these trends, they're making so much money. How do they do it? Um, well, you know the type of trend that keeps going higher and your profit keeps snowballing while you do nothing. So price just keeps rising and they just in the money the whole time. How do they do that? They're not really doing anything except for looking at their charts. Well, the secret to this is they use a trailing stop loss. Now, you're thinking, it doesn't work. Perhaps some of you have tried this before. I've used it before, but the market always hits my stop before it trends. That's because you have the wrong expectations about riding a trend, or you're using the wrong trailing stop loss technique, or your stop loss that's been trailed is too tight. Now, I'll teach you how to fix some of these and more. Plus, you'll learn some powerful techniques to trail your stop loss so that you can reduce risk and ride massive trends. So what is a trailing stop loss and how does it work? We've basically explained it, but here's a more colloquial way of looking at it. A trailing stop is an order that locks in profits as the price moves in your favor. So as price rises or goes down and you're in a buy or sell trade respectively, it will lock in your profits as you're moving. And you only exit the trade if the market reverses by X amount, by a certain amount that you will set. So that's the essentials of it. So this is what it would look like on a chart if you were trailing the stop. Now, I've shown you just now, but let's have a look at this particular chart. Now, we would enter a trade somewhere around this region here, for example, just with any system, whatever trade system we're using, let's say we just entered a trade just for demonstration purposes. And we set our initial stop loss at this point here. Now, as price moves up, if this was all we could see on the chart was price moving up, as it was moving up, our stop loss would have been moved up with it. So if we had entered a trade at a certain point, let's say here, then we know that once price moves up, we're in profit. We're higher than this point here. And if we get stopped out, if price reverses against us again, we're going to be in profit by whatever amount of pips. And it continues that way until eventually it might get hit. So we keep trailing the stop. As the price goes higher, we just let it run, and that's how you do it. So if you bought Euro USD, for example, with a 50 pip target and your trading stop loss is 15 pips, this means if price goes higher to say 15 pips higher, your trailing stop is also adjusted. And you'll exit the trade if the price drops also to another 15 pips. So see how it works? It trails the price by a certain level. Now, you might be wondering, why use it? Now, no one can predict how long a trend will last, right? But what you can do is using a trailing stop loss and take what the market offers you. So you're taking whatever the market is offering you at that particular time. There are certain disadvantages of a trailing stop loss. Most of the time, even if you use a trailing stop loss, you'll not ride a trend. So a trend like the one I've just shown you is not all that frequent. More often than not, the markets will be choppy and move up and down and potentially hit your stop more often. Also, it's common to watch your winners turn into losers in that kind of situation as the price moves in your favor and then moves back in the opposite direction and hits your stop loss, even though your target wasn't hit, right? So this causes many traders to give up and they claim, well, it doesn't work. But here's the thing. If you can endure the emotional swings, you'll eventually have the opportunity to catch a huge trend. You could achieve a 1-to-1 to a 1-to-20 risk to reward or more. Now, most systems would use a trailing or a target of 1-to-1, 1-to-2, but using a trailing stop without a definite target can give you the opportunity in a very trending market to achieve possibly a 1-to-20 risk to reward ratio. And this is something most traders never get to experience because it doesn't work for them. They never use it. Now, how to trail your stop loss with a moving average. So let's just have a look at some form of a system. And yeah, I'm just using a very simple moving average. Nothing more, nothing less. Now, many systems have got their own requirements. I suggest you stick to those requirements, whatever the rules might be of those systems. However, you could also implement some of what I'm going to tell you today. And just to give you a basic example, I'm going to show you a moving average on a chart. So a moving average is an indicator that averages out the past prices and shows it as a line on your chart. You can use it to identify the trend, filter out the noise, etc. And most who are new to trading or have just started will know what a moving average is. So let's learn how to trade your stop loss then, very simply. Here's how. Decide on the type of trend you want to trade. Use the appropriate moving average and exit when price closes beyond it. So let's have a look at that. This means that if you want to ride a short-term trend, you can trail your stop loss within a 20-period moving average. So you're just looking in the short term to ride the trend. 20-period moving average is going to be an example that I use there. And you can exit your trade if the price closes beyond it. So let's have a look at an example. Here we have an example of a chart with a 20 MA on it. And you can see that at this point here, when price crossed above the moving average, we would have set an entry. And now we're going to trail this stop loss up. As it moves up, we keep trailing according to the moving average every so often until price crosses below the moving average. In this case, it's a buy trade. It would be the opposite in the case of a sell trade. Now, once it does, our stop has been set at this point here, and price comes down and closes below the moving average. It takes out our stop. So we have set the trailing stop as an example by using the moving average and moving along the moving average. So here we go. You can use a 50-period MA to ride the medium-term trend and a 200-period MA to ride the long-term trend. So that would be a much longer period of time. So on the shorter time frames, you'd be using the 20. On the higher time frames, maybe the 1 hour, 4 hour, 50 maybe, and a 200 on the higher time frames. Now, the zero indicator method to trail your stop loss, you know an uptrend consists of higher highs and lows. This means you can use the swing low to trail your stop loss, because if the trend holds, it shouldn't close below it. And I'll explain just now how to do it. You identify the previous swing high or low. You set your trailing stop loss below or above the swing, depending on whether it's high, if it's a swing high or a swing low, right? Now, if the price closes below or above it, then you exit the trade. So let's have a look at an example. So here we see a downtrending market, and we're looking to sell, right? And what happens is we might be entering, say at this point over here, we're setting our stop loss above, because remember, price is going to go in this direction, downwards, and we're profitable while we're moving downwards. But in case it reverses, we're setting our stop loss above the most recent swing high, essentially defined as 3 candles for our purposes, yeah, where the middle candle is higher than the 2 on the side of it. So it's a high point. Let's see it as a little peak. And the opposite for swing low, which could be, for example, here where the low, and by I measure the wicks as being the lowest point, is higher or lower in this case than the candle to the left and the right of it. Swing high, the highest point is higher than the candle to the left and the right. So in a downtrend, in a sell trade, we're looking to place our stop loss above the most recent swing high. And then as price moves down, we can trail this stop loss down above the most recent swing highs, right? Until eventually we hit our target and we're out of the trade. So another tip, the market tends to hunt stop losses below or above support resistance or the swing high or low point. So market will tend to go towards those areas where we set them. So to avoid that, we want to set our stop loss a couple of pips below the market structure, below the swing low or above the swing high or the support or resistance level. So just a few pips above, as you saw in my example just now, above the most recent swing high, or a few pips below the most recent swing low, not on the exact point, but just above or below it. So how to trade your stop loss when the market starts going crazy? What do I mean by crazy? It's when the market goes parabolic in one straight line, like a rocket taking off, right? So this doesn't happen often, but it does happen. For example, it just shoots up within hours or minutes, and you see a very parabolic upwards move. Here's the thing. Parabolic moves are not sustainable. It's a matter of time before the market reverses and collapses. So it'll eventually go in the other direction. So in market conditions like these, you want to trail your stop loss very tightly. So if price is rapidly moving up or rapidly moving down and you're in a buy or sell trade respectively, you want to keep your stop loss in those situations extremely tight. Don't give it much room to breathe because you want it to run at the first sign of cracks, right? So you want to be out of there if for some reason it suddenly starts moving in the other direction. So how do you do it? You identify the time frame. So for example, if it's a 1 hour or 15-minute, wherever this move is happening, you trail your stop loss on the previous candle low. Now, this would be obviously in the case of a sell trade. If you on a buy in the case of a buy trade, sorry. So as the price is moving up, you want to trail your stop on the previous candle low. If it's in the opposite direction and it's moving down fast, you want to trail your stop on the previous candle high. Okay. So exit if the price breaks and closes below it in the case of this example here. So let's just have a look here. So here we have an entry at that point there. And now we're going to just, as the price moves up, we're just moving our stop loss very tightly until eventually we're taken out up with the low of each previous candle. So here's another trading tip, how to capture swing and ride massive trends at the same time. Well, here's the thing. There's no rule to say you must either capture a swing or ride a trend. Instead, you can do both. This means you have the consistency of a swing trader plus the ability to ride big trends like a trend follower. So how does this work? Well, you exit a portion of your trade at a fixed target and let the remaining ride the trend. So here's an example. Let's say we want to take partial take profits on the Euro USD weekly chart. So we'd have entered at that point there on the chart. And when it gets to this point here, we're going to take a partial exit. We're going to exit half of our trades, close those positions, and let the remainder run. And they would then run up to the end of, you can see this progression, right? So we get the benefit of taking a partial profit at this point, and then also get the benefit of getting further profits as the profit or as the trade runs up. So it might, for example, have had a very set rule that said that you've got to target at this particular point, and as you get there, you could partially exit the trade, at least then be in profit, and then let the remainder of your trade run. Now, there are a couple of things to consider here. How many units do you sell at your fixed target? So, you know, basically, if you're in the stock market or if you're in the Forex market, how many pips do you basically need to get to your fixed target? How will you manage the remaining pips? Well, let me explain. How many units do you sell at that target? Here's the thing. If you sell too little units or pips, in other words, if you're aiming for too few pips, it becomes a trend following trade. And if you sell too many, it becomes a swing trade. For starters, you can sell 50% of your position at the first target and keep the remaining to ride the trend, as I mentioned earlier. So once you're proficient at this technique, you can play around with the percentage to suit your goals. So how will you manage the remaining part of your trade, or the remaining units or pips or account? Well, you've hit your first take profit. Yay, what now? Will you attempt to ride a trend or have a second target profit? Now, if you have a second target set, where will it be? If you want to ride a trend, how will you trail your stop loss? Clearly, these are questions only you can answer, and it depends on your goals and your personality. But I've given you a few options there. You can use the candle, the close of the candle in an uptrend, and a parabolic move, or the open of the candles in the previous candles in a sell trade or downward move. In that situation, you can use swing highs, swing lows, and trailing stops. So there's various ways that you can do this, right? By setting certain pips as your trailing stop, for example. So think about it. It depends on you, your personality, how you'd like to do it. If the system you've got doesn't explain properly about that, you can use one of those techniques. Now, you might be wondering, which is the best strategy to trail your stop loss? Now, I'll be honest here, there's no best trailing stop strategy. There is none, because it depends on what you want from your trading. It depends on what you want and the particular system you're trading. So for example, to ride a short-term trend, if you're in a short-term trend with your system, you can trail with a 20-period MA, as I mentioned. You could also use a 280R, etc., for those of you who are familiar with that. To ride the medium-term trend, you can trail with a 50-period MA. Or to ride a long-term trend, you can trail with the 200-period MA or 680R. Now, do you see my point? It depends on what you want. Are you looking to ride a short-term trend, longer term, medium? It also depends on that. So the most important question to ask is, what's the type of trend you want to capture? You're just looking at a medium trend, or are you looking very long term? And that's the right technique to achieve your goal. Now, first, let me share some other interesting details with you. And these are from various analysis and so on, especially on the stock market, but they apply also to the Forex market. And the result of using a 15% and 20% trading stop loss, so you're trading 15 to 20% of your position, gives you about the same overall result with 20 stop loss level. So they're both more or less the same. And most of the time, these will lead to higher returns. Now, the highest average quarterly return over a period of 3 or so months is achieved with a 15% stop loss level. And the highest cumulative results of 57.1% at the 10% stop loss level were followed closely by the 15% at 53.31%. So basically, what we want to do here is look at about a 15% stop loss level over that period, if it was for a longer term period. Trailing stops are better, as only at the 5% and 10% stop loss levels did the traditional stop loss perform better than the trailing stop loss, but the overall returns would have been bad. Now, at all other loss levels, trailing stop loss outperformed, most notably at the 20% stop loss level, where it performed 27% better over a long period, like over 11 years, all the trades analyzed. This particular stop loss at 20% tended to perform 27% better than any other stop loss over the very long term. So as you can see, when applied to a long period, over a 54-year period, a simple stop loss strategy provides higher returns while at the same time lowering losses substantially. So these are various analyses that were done over half a century, and they do tell you that sometimes the simple stop loss strategy provides higher returns. Now, a trailing stop is better than a traditional stop loss strategy, and the best percentage, as I mentioned there, to use when trailing is either 15% to 20% of the position, right? So if you use a pure momentum strategy, a stop loss strategy can help you completely avoid market crashes and even earn you a small profit while the market loses 50%, for example, right? So stop loss strategy lowers wild down movements or up movements and substantially increases your returns. So what conclusion can we gain from this? A trailing stop loss is an order that locks in your profits at the price as price moves in your favor, right? And you could trade your stop loss using various things: moving average, you could use the average true range indicator, various things, as I mentioned. You could use a percentage change, market structure, which are various support levels, highs and lows. You can use the close of the candles, etc. And the highs and lows could also be the swing highs and lows. So there's various swings that you can move. There's no best method to trade your stop loss, but what you can ask yourself is, what's the type of trend you want to capture, and then use the right technique for it that you prefer to use. So let's look then, as I mentioned earlier in the presentation, at some other methods of entering trades, which are sometimes confused with the stop because of the terminology. But let's just cover them anyway, because they're part of our trading. So we've got various types of orders, right? So when trading the financial markets, including Forex, there are essentially two ways to open a trade. One is instant execution. Your trade is open immediately at the price available, as I showed you earlier. And the other is a pending order. Your trade is opened when a market reaches a specific level chosen by you. Now, over time, you'll probably find that you can use both types of transactions in your trading. No, nothing wrong with that. Let's look at how exactly pending orders work, though. The market order is instant, but how do pending orders work and why are they needed? Now, the fact is that always being up to date with market news and significant moves is important, but Good planning is even more important. When you have your own view on a particular market, but don't have the time to constantly monitor prices, manually, excuse me, penning orders could be a good solution. Now, unlike instant execution orders where a trade is placed at the current market price, penning orders allow you to set orders that are opened once the price reaches the relevant level chosen by you. So we'll cover some images just now, but let's just have a look at a buy limit. Buy provided the future ask price is equal to the predefined value. So you've set your value. Once that price equals that value, then we have what's called the buy limit. The current price level is higher than the value of the placed order. Orders of this type are usually placed in anticipation that the secured price or the security, whatever it is, pair, having fallen to a certain level will increase. Right, so we'll have a look at that just now. A buy stop is a buy provided the future ask price is equal to the predefined value. The current price level is lower than the value of the placed order, and orders of this type are usually placed in anticipation of the security price having reached a certain level and will keep on increasing. Now we have also what's known as a sell limit. Now this is sell provided that the future bid price is equal to the predefined value. The current price level is lower than the value of the placed order. Orders of this type are usually placed in anticipation of what the security price or the security will have increased to a certain level will fall. Now, sell stop, sell provided that the future bid price is equal to the predefined value. The current price level is higher than the value of the placed order. Orders of this type are usually placed in anticipation that the secured price or the security would have reached a certain level and keep on falling. So here we have a couple of examples. And here we have a buy stop order, for example. So here, as you can see on the chart, your buy trade gets opened here when the price crosses the order from below. So we have a buy stop, price comes in from below, and say we're at this point here, we set our buy stop here. Eventually, only when it hits that level, at the predefined level, will the trade be entered into. Right? Now, here we have a sell stop order, where again, price is moving up and we anticipate it might be going down, but we're waiting for it to reach a certain level. So we set our sell stop order there, and only when price reaches that level does the sale get entered into. And so you can see price crosses from above. That's a sell stop order. Now we have a buy limit order. Now we see here, price breaks below the order, and we're waiting for price to reverse back. Now at this point here, we're waiting for it to reverse back to this level. And eventually it does. And in that case, we are entering a buy trade. So price has come below, but now we're expecting it to reverse. Okay. And the opposite then for a sell trade order. Price breaks above the order, and we are anticipating that the market will reverse. So we set a sell limit order here, so that eventually when it does reverse and hits back down to this level here, we enter into a sell trade, right? So that's basically it. A trading stop is an order that locks in profits as the price moves in your favor. And remember that you can trade your stop loss using moving averages, percentages, market structure, weekly highs, lows, swing highs, and swing lows. There's no best method to trade your stop loss, as the earlier part of the presentation I'd alluded to. Ask yourself, what's the type of trend you want to capture, and use the right technique to do that. Now, I just want to pause there for a second and go into the comments. And I see there's a few comments here, but all of these looks like people are saying, thanks, my question's been answered. They're going to try it out. Fantastic. That's great news. I'm glad to hear it, guys. So at this point then, I want to remind you for a moment about something that you should be involved in. It's something very important that if you felt that anything I've just showed you now is of any value to you whatsoever, then this is very important for your financial future. And it's something that I call the Accelerating Profits Program. And you can see it's been developed by us, by Tradeology. What you've just learned now is a very small portion of a much larger picture, which involves a system and a lot more. And This accelerating profits system looks like this on a chart. All right, so we've got all our rules set for this particular system, including the stops, including take profit targets, for example, and so on. There's many different rules to this, but they're very easy to follow, but it's all set out to you in a mechanical way. And I want you to really take a look at what I'm about to show you now, because this will improve your trading tremendously. This program also includes some incredible bonuses that I've put together, and these comprise of various systems. Number one, for example, the money bounce system at a value of $250. This is not the price of what I'm going to tell you now. It's just to show you the value, and this is alone worth the price you will pay. Now, there's also the profit ribbon system at $250, SRT system indicator valued at $250, rejection spike report valued at $250, another limitless cash system valued at $250, and a rapid dollar system valued at $250, a profit spring system and technique valued at $250, a dark numbers report, and this is being compiled by a world leading expert on Elliott wave theory, Nicola Delech, especially to be shared with you, and something called the FIB Cash Compass, also valued at $250, and also a Fibonacci code report valued at $250. These are incredible. And now there's also another one, number 11, the ACE technique, created by a former world trading champion. And this is also valued at the very least at $250. We've got another report called the PIP key, a system, at $250. Now, the complete accelerated profit system, including the full video, written instructions on how to trade it, and to do so in any and every market condition, currency pair, or time frame, should be valued at $2,000, but you won't pay that. You also get exclusive and unrestricted access to a private members area where you'll learn as much as you're willing to about how to trade responsibly, accurately, and profitably. That should be valued at $1,000. You get full-on support, 24/7 support from real traders who know the systems inside and out. Just about any trading question you could possibly have will be answered quickly and accurately. That should be valued at $500. Plus, you get what I mentioned earlier, the 12 amazing cash-making bonuses. All of these here, which have a total value on their own of $3,000. That's a total of $6,500 in real value, but you won't pay that for just $499, which is a rock bottom price. I'm going to be giving you the full profit, accelerating profit system today with everything included in the above, immediate access to that. So that again is all of these bonuses, systems, together with the members area, together with live webinars and so on over a period of weeks. We're going to be teaching you everything you need to know to get you profitable as quickly as possible. No matter where you are, whether you're a beginner, intermediate, or advanced trader, this is for you. It's a limited time because I'm only accepting a few members. My membership will in total be only 250 people. And as I'm recording this right now and showing you guys live, there are just a few of these places left. Now, that's valued at $499, as I mentioned. Now, I've got something else called the Accelerating Profits Elite Program. And this is something I'm only showing those people who are watching this today. Nobody else will see this, and it's only limited to whoever watches this and for as long as I've got space for people. And this is an accelerating profit app. What this thing does is it's a trade assistant, and it automates everything for you. It's got your stop loss set, your take profit target set. It tells you when to enter a trade. It'll alert you to it. It shows you all you need to know. All the rules are put onto one app on your screen. You press one button, and then you can decide whether to enter or exit the trade. It sets everything else for you. Now, you also get group training on this. Private group training separate from the first system that I've showed you, the Accelerating Profits program. This is now a more advanced level. Although you can be a beginner to join here, you get group training on this particular app. You get a 30-minute call with me personally, all right, and 1 hour coaching with a pro trader, and 2 other elite coaching calls. You also get lifetime access to the members area, lifetime discount for all future systems, and an audio recording on how to train your mind, the psychological effects of trading, and how to get your mind around that. That you'll get some training on, and you get concierge support, a dedicated trader assistant. Now, you also get lifetime access to the page and training, and that's valued at $750, including the system and all of these bonuses and all the live webinars and so on that you're going to get also with the Accelerating Profits program. So that on its own at $499 is fantastic. For just a couple of hundred extra, you get everything here on the left and everything here on the right for $750. I really can think of nothing else out there at this stage that is anywhere near to this. And it's only available through one link here. You will not find this anywhere else. And I'd ask you not to share this link because it's only going to be available to a few people. So if you are going to share it now with your friends within the next few minutes, up to the next hour, because once I've got all the students I need, I can only do so many calls with people, so many people can be trained. So there's a limit to 250 people overall in the program, and then even a tighter limit to the amount of people who are in the program but have taken up the elite program, because I need to be in touch with everybody personally, and I want to be sure that I'm focusing on everybody personally. So right now, if you can go to that link, acceleratingprofits.com/VIP. And once I'm full up, I'm going to take the link down. It'll be a sold out, and it'll be done. So with all the people on here, and I know some people who are going to be watching the recording shortly, this is the only time it's going to be available. Then this recording will also be taken down. So I'm really looking forward to this, guys. I'm looking forward to seeing you inside of my Accelerating Profits program. What we've learned today is just a very small bit of the potential that you can unleash with your trading, no matter whether you're a beginner, intermediate, or advanced trader. So I'd advise you strongly to go right now while this offer is still available. It's something I've made available exclusively to you for watching this presentation. And it's available only for, at the very most, 24 hours, or until I have filled up all the spaces, whichever is sooner. So please take a note of that and go there right now. I'm just going to leave that up on the page for a minute while I just check to see if there's any questions. Excuse me. Greg is asking, can I get this immediately or do I have to wait? No, Greg, as soon as you join us, you get immediate access to this. You get everything on the left here. And if you join me with my Accelerating Profits Elite program, you get everything on the left together with the app immediately. And then I will be scheduling calls with you, and we'll be setting out schedules for how to improve your trading. This, by the way, here is a snapshot of our members area, which has got various things in it, because I see there's another question. What all is in the members area? Well, we've got a whole section here on webinars where you can register for weekly live webinars. You can also watch the recorded versions of them. We've got all the bonuses set up, scheduled for release for you in there. We get a section where traders interact, where you can post your trades and other traders can comment on it. And I will also, using the particular system, Accelerating Profit system, but we're going to be covering so many techniques about how to use the system, how to trade generally, that we are interacting with each other daily, almost hourly inside of that, or even by the minute inside that members area. It's all live and done. You can also download, of course, there everything, all the systems through a download section, and access the Accelerating Profit app if you have taken up my Elites program. And we also have modules that teach you exactly how to trade the system. You could be up and going with this today. There's no question about that. And it's there for you, and things are being added constantly as we get going through our program. It's set to be able to be user-friendly and accelerate your profits, whether you are a beginner trader, an intermediate trader, or an advanced trader. And there's even a section in there for beginner traders, where I've set out a whole lot of lessons, tutorials on how to to trade, what trading is all about, what is a pip, and so on and so forth. So you'll be able to get going immediately, also how to use MetaTrader 4 and so on. So there's a lot in there that's covered. And what I really want to encourage you to do, though, is to join my elite program while there's time, while there are people still to do it. And that is where you're going to get even more benefit because of the absolute personal interaction with me and other coaches, pro traders coaching you one-on-one, in addition to everything else you get on the left there. So please have a look right away at www.acceleratingprofits.com/VIP, this link over here. It's been put into the chat, but if you have a pen, scribble it down, make a note of it, type it in your browser straight away, go and have a look and see exactly what's there. Basically, we're going to get two options. One will say, yes, I want to buy this at $4.99. The other will say, I want to get this at $7.50. Everything here, and while it lasts. Now, you could also have a look at the system as a whole at www.acceleratingprofits.com without any hyphen, and everything is set out there for you, but you won't be able to access this special elite program that I've got mentioned here. That will only be through this link /VIP. So one more time, www.acceleratingprofits.com/VIP. All right, so I'll leave it up just for a few seconds. Thank you, guys. I see a lot of guys here saying thank you. They're going there. I'm hoping to see you just now because, as I said, it's almost instantaneous. You get right in there. You'll get your password sent to you. You get all the information you need, and you'll be in the members area. And there I've got special instructional video for you to welcome you, show you around. And of course, I'm also available inside of there too. www.acceleratingprofits.com/VIP. I'll stop sharing just now. Thank you very much, Emir, for the presentation. I know it's been going for quite a while now already, and it was intended to be a short one. So thanks to everyone that's joined us today. Thank you, Emir. And I hope to see you inside the members area. And it's been a pleasure having you guys on here today. And I'm sure you've learned something of value. That is my wish. Cheers for now, guys. Thank you,
Bye,
Emir.
everyone.
Bye.